Okay, welcome everybody to Wall Street Reporter's Smart Money live stream. I'm sorry we're starting a few minutes late. Bruce Campbell is here, portfolio manager for the Stone Castle Funds. Bruce, welcome.
Yeah, thanks for having me on.
Absolutely. We get a lot of people who want to, a lot of investors, retail investors especially, they are wondering what is happening. They're looking for guidance for somebody like you who has been there through multiple market cycles, especially in the microcap space. So with that said, Bruce, what's your take on this? I mean, I think a lot of the microcaps peaked back in like February, March, and now the bigger cap stocks are coming. Where are we at in this cycle?
Yeah, I mean, right now we think we're kind of in the midst of the chop. So if you go back to, like you said, you go back to February, probably if you look, a lot of stocks peaked out the middle of February to kind of the middle of April timeframe, especially if you look on the mid, small, and micro cap side of things, and then you drill down a little bit further and you look at some of the companies that are more emerging and developing versus ones that are established with revenue and cash flow. We see this, and we've been through multiple cycles, and so when we see this happen, what we know is that the tide tends to go out. And so through most of last year, what you saw was that throughout the year we continued to see participation in the markets move bigger and bigger and bigger cap, until the point where we had lots of talk of kind of the FANG was really all that was performing. And if you looked at the kind of NASDAQ numbers at the end of the year, the index was at a high or close to a high, and yet the number of stocks underneath that, if you drilled down, were substantially below their high by 50%, and in some cases even more than that. And so there's been quite a rotation going on. We're seeing money flow out of the sector, the sort of micro small caps right now, and look for other areas. And what we think is probably going to happen is that you'll see right now there's lots of uncertainty because of the Fed, because of interest rates, because of inflation, and in all those environments, it just investors just, they go to where liquidity is first and foremost, while they wait to kind of find out what's going to happen. Now, if we look at past history, we know that in the small, micro, and mid cap sectors, they actually perform reasonably well in a rising interest rate environment, and also in an inflationary environment, because they have the ability to adapt and to change their pricing in a lot of cases, and they're not left behind by inflation the way, say, a larger company is left behind. And so once we get through this chop period, we think that market will start to emerge again. And it's much like what we saw if you go back to COVID, and when kind of everything originally hit there. The market had its big sell-off through February and March, and then when April emerged, you started to see kind of almost immediately the small, mid caps and micros all doing really well. We think that once we get through this chop, which we're not too sure how long that takes, maybe it's up until the March meeting when the Fed actually raises rates. Once we get through that chop, then at that point in time, we probably will see sort of better, smoother sailing for some of the micros for sure.
Yeah, it's interesting because this is, I think the micro caps were at the last downturn, like you said, they were the first ones out of the gate, right? They popped out of the gate first, and then the bigger cap stocks took off, and then they followed them. But the micro caps were the first ones to drop last year, and now we're kind of seeing the big guys come down. So how much? So you think it's going to be March until? Yeah, it's interesting. I'm looking at a lot of the charts, right? Like a lot of the micro cap charts, a lot of the stocks that like we work with. The charts pretty much look like to me like they've bottomed out. They're not like they're done almost. I mean, they had a big sell off. They're just kind of bouncing along the bottom, or they're holding on. They're not like some of the FANGs, which now look like they're about to keel over. So do you think we could see like these things just explode in the next few weeks, like the micro caps just skyrocket, March 1st or whatever.
Well, like I just sort of put March out there, but it's not like a pinpoint in the
We need
calendar
an
per
exact
se.
time. We need the exact
Yeah,
date.
I mean, I wish we could do that, right? I mean, that's where we need a better crystal ball than we have right now. But if we, we just kind of look at the March meeting is when most observers, pontificators of the markets anticipate that the Fed's going to actually raise rates for the first time, and that kind of, what we feel is what sets kind of things in motion. That okay, now it's final. The Fed's there. It's like kind of the buy on rumor, sell on news type of thing. That's now the news. It's now priced into the market. We know that they're going to do increases. We don't necessarily maybe know how many. We'll also see economic data by then. So are we starting to see economic data slowing? Are we still seeing accelerating? Where are we at? So we're just kind of saying that that's an event in the calendar that probably will have an impact. When that happens, we don't know. But to your point, there are certainly a lot of charts that, with the, going into the end of last year, the small and micro area, we saw a lot of tax loss selling. And, those
Horrible.
all got pounded through November and December of last year. And it was pretty relentless. We saw a little reprieve, kind of the last week of December as we got through those tax loss selling dates. And then we saw, stocks start to appreciate again and have a bit of a run into the new year. And then almost immediately as the calendar turned over, the concern over inflation, the concern that inflation was rampant, running out of control, took over. And then at that point in time, I hate to use the risk on, risk off analogy, but you saw investors really change their mindset to, oh my gosh, like it's been a good year last year. Now we're going to have inflation. We're spooked out. Let's just sell and get out. And, that doesn't help the, any of the markets, big, medium, small. And you've seen that selling pressure, and it's been bouncing around here. You are seeing pockets now where things are starting to improve, and to your point, you see on some of the charts, some of the smaller micro stuff has started to flatten out and base here, and that's what you need to do first is get that selling pressure out of the way, and then when the selling pressure subsides and the market calms down, that next uptrend starts.
Okay. Do you think? I mean, I know you're a little bit biased, but do you think that micro caps are now set to outperform the big caps in 22, starting in March?
Well, I wish I had that crystal ball that told me exactly what was going to
You
happen
have
in
it. It's in the back. It's
2022.
Oh, camera.
Yeah, that's right. It's over there. I can't show it to you though because it's really secret.
It's proprietary. It's proprietary.
Yeah, exactly. That's it. It's proprietary. Well, I wish I could say that, but what I do know is, anecdotally, we see markets go in cycles all the time, and we really have seen the tide going out on, a lot of the smaller cap stocks and the small cap sectors and the mid cap sectors as well, since that kind of February to April timeframe last year. So they've really underperformed, and the leadership kept going bigger and bigger and bigger. Now you have to look at it and say, okay, we're not heading into a recession. If you make that assumption and that assumption is correct, then yes, at that point in time, we should start to see investors looking again at valuation, looking again at opportunity, and that's where they'll start to look at the smaller stocks again. The large caps are all very expensive. Everyone's cognizant of that now, and the tide's moving out there. Is the tide moving out because we have a recession that's about to happen? Well, if it was, then you'd see a lot of other things that we aren't seeing right now. So fixed income hasn't been strong. We're seeing emerging markets actually strengthening. So historically, when you have seen, recession about to appear, you see it, you see an inverted yield curve, you see, fixed income starting to outperform, you see emerging markets underperforming, and that's not what's happening right now. So what we're seeing is probably a fairly big shift in sentiment where the larges have been outperforming for a number of years now. The small really underperformed, and now they're going to, they've gone through that correction period, and they're probably set to start to accelerate.
Interesting. So I'm going to extrapolate what you said to make an even more bullish story here. So basically, what you're saying, Bruce, I don't know if I'm putting words in your mouth, but basically, microcaps right now, starting in March, we could see a bigger bull market than what we saw between the summer of 2020 and February of 21. Potentially, potentially.
Well, again, that March timeframe, who knows when it is? I'm just, saying that that's a catalyst point
Yeah.
where the market will look, and potentially that could be when things start to happen. It could happen before that. It might happen a few months after that.
Yeah.
The big visibility will be, okay, how out of control is inflation? Because that's the concern here, is that, we went from being transitory to now where it's, really structurally in the economy. And now, is that inflation still rampant and running out of control? Or have we started to see scaled back in some areas? And are things starting to come back? Supply chain is going to have an impact on that. And again, is that a Q1 or Q2 item as far as when we're going to start to see supply chains come back and start to see, more goods rolling, and people aren't hoarding and prices aren't moving up because it's been difficult to move them, produce them, and get them to market. We obviously do see the commodity inflation that's there, and that's always something that the economy has to reconcile and figure out. But again, the market will make adjustments, and the economy will make adjustments to deal with that.
I'm an optimist. I think we're going to have actually a bigger bull market than we saw last year, because I mean, if you look at the charts like that, all the CSE index, I mean, it's like a ski slope. It's like things are down like 75%. So when it bounces, okay. So we have a comment. Oh, we're going to get into some audience questions for you, Bruce. Or we're going to have audience questions coming up. We have some tough questions here about they're upset at you for selling certain stocks that we like, but whatever, So this guy's saying, Nadzed is saying, I doubt it'll be a bigger bull market since the Fed is taking money out of the system. Is that what you're saying, Bruce? I mean,
not necessarily, because I mean, the Fed's raising interest rates, but they're still buying back about $40 billion a month in treasuries. So they're taking less. They're taking money out of the market. So they were at 80 billion. So they're taking out less, but they're still taking money out of, they're still taking treasuries out of the market, providing liquidity. It's just not as much as it was before. And again, that's an adjustment, right? The market was used to having, so much liquidity. It was just sloshing around. It was so easy. Now there's less liquidity, but there's still liquidity that's being generated by the Fed itself. And, that's one of the things that the market has to sort out is, does that quantitative easing, that buybacks, do they disappear altogether, throughout the year? The Fed certainly hinted at that, but do they get there?
Yeah, but I think you said that the microcaps have done well in periods of inflation with rising interest rates. I think in the 70s, penny stocks did well, right? In the 70s, I think it was the mining. It was like in the U.S. I mean, that was a little bit before my time, but I think anecdotally that's what I hear.
Yeah, and I mean, even if you just look back and search when the 10-year Treasury yield has gone up a full 1% or 100 basis points, what happens with the small and mid cap and micro cap stocks, and they have periods where they've done very well. So you look back, just in the last decade, there's been probably 3 instances of that where those markets have still done very well.
Okay, bottom line is, I think investors for in 22 they should be looking at the Stonecastle funds, all the Bruce Campbell funds. This is the place to put your money in, because I think microcaps will outperform 22. It's got to happen. I mean, we're due, right?
Well, it certainly had a big correction. So again, if the market holds together and we're not heading to a recession, then at that point in time, we could see some of these fantastic companies have, big moves. And if the entire sector is getting sold down, then it's even difficult for companies that have, fantastic news and are generating, positive revenue and positive cash flow, or moving towards that, to do well. But if we get to a situation where the pressure isn't on the entire sector from a program standpoint, where okay, we're in big, we want to get, or we're in small, we want to get only big, then at that point in time, you'll start to see individual stocks that have catalysts and have that are driving those numbers start to have significant performance.
Okay, Bruce. Speaking of sectors, what do you think? Do you have? What do you think? Which sectors do you think will do best in 22 in the microcap space? Like I don't know, like psychedelics, crypto. What do you think? You have any specific sectors?
I mean, we tend to be, and we have in the past always had a slant towards healthcare and technology, and in really combination of those two together, they when smaller companies come together, quite often they can be inquisitive, quite often they can have big catalysts that really move the needle, and that's one sector that we like. It also tends to be one that there tends to be a lot of acquisitions made, and so we'll have a company that starts off really small, grows a bit bigger, and then gets taken out and becomes part of a larger company. And so there's always those catalysts in that sector as well. So that's one that kind of perpetually is on our radar. And when we do meetings with companies and we're meeting management teams, that's a sector, or those are sectors that we often are attracted to and are interested in learning more about. We're in a commodity cycle here as well, and we probably have seen a turn in that commodity cycle. So if you look at kind of the last 20 years of history, roughly from 2000 to 2010, we were in a commodity cycle, and then from 2010 to 2020, we were out of that commodity cycle. And now we think that that's probably changed, and we're starting to go back into that. So you could start to see, more interest in junior exploration companies, both on the energy side and on the metals and mining side as well. And so we're constantly scouring that as well, because we think that that's a sector, or those are two sectors that'll have tailwinds going into the next decade. And you can see big returns out of, companies that are coming on stream and growing faster than the overall market.
Okay, so so resource sector, you think it's due for a comeback now? Like basically, I think people have been waiting for, like, are you talking about outside of precious metals? What about you talking about, like, I don't know, how about like are you into like the battery metals, the energy metals, lithium, all that stuff?
Yeah, I mean, a sector like lithium, the energy metals, they have a tailwind at their back, but now from just the adoption of EV and sustainable energy, if you saw also a tailwind from the materials, like actual materials investment, then they kind of have two tailwinds there, and that could be an opportunity for sure.
Okay, uranium, all that stuff. Okay, so you mentioned healthcare and technology, sort of that intersection of healthcare, technology, M&A, all that stuff. We talked about Relic. I think that was one of your holdings. We work with Relic. Now, somebody said, did you sell Relic? Are you out of Relic? Or are you in? Where are you at with Relic?
We are, yeah. So we actually moved out of Relic just because we had a number of different other opportunities that we wanted to look at and go into. We still have Relic on our radar, and it's one that we've owned. If you go back in the history of our portfolios, we've owned and been out of on a number of occasions. We tend to be fairly active, so there's times when we'll own it, and there's times when we're out of it. We still love everything that that team is doing, and we think that they'll continue to have a fairly solid year here in 2022. And that's one that is out of our portfolio right now, but it could very easily be back in there in a month's time or 5 months time.
Well, okay, so you're an active. I mean, you're relatively active in trading. I mean, I don't know if the word is trading, but you're not like a passive buy and hold guy, basically.
We are not passive buy and hold, no.
Okay. What about, I think somebody also, we can't keep track of your portfolio. There's so many trades going on. What about some people saying, what about VSB? Are you, a lot of people are asking, Visibility Group, VSBY in Canada. So are you in or out of VSB?
Yeah, so we still own that. We certainly took our position sizing down a fair bit. We risk manage our portfolio, and we have a number of different tools that we use to do that. One of them is that we use a bunch of different technical tools and stop loss tools. And so when a stock breaks through technical levels and stop loss levels, what we'll do is cut it back and then hold on to it, or hold a piece of it perhaps. And then when it bottoms out, we'll add back and then look at the reacceleration. We also do that on the upside. So as a stock has a big run, we'll trim back our weighting in the event it pulls back, and to add back more.
So, okay, so this is, I mean, we've talked about it in the first interview, but really, I mean, you have a very disciplined system. This is not like, you don't go by gut feeling, basically. In other words, like, once something drops at a certain level, whatever it is, you cut back once it becomes too much of a portfolio. I mean, basically, you have really very, very strict, I guess, risk management systems in place.
Yeah, what we know is that, especially in smaller mid cap stocks, is that you can have a management team that executes really well. You can have a stock that the company is doing very well, but sometimes the stock itself doesn't do well, and that can be completely and totally extraneous factors. In Canada, I just know that the market here, if you go back a decade ago, there was a lot more access to the market from money that was managed by investment advisors and portfolio managers. That's really gravitated away from a lot of those professionals because of compliance. And so their compliance departments, it's challenging for them to monitor and manage from a risk perspective and paper up. And so they don't have access to those as much as they did. That being said, they'll introduce those into their portfolio and deal with the compliance when they see certain times that it's advantageous. And so when that money flow is coming in, we want to be there. But when it starts going out the other way, we certainly want to step aside, let the stock do what it's going to do, and then go back into it. There's times where we'll miss out on a stock, we'll sell it, and then it'll go higher. And, we kind of kick ourselves for doing that. But for every time that happens, there's ones that, drop by 50%. And, we look back and go, well, I'm glad we weren't there, and we can add back to it at a lower price.
Yes, I think this is the big point that you made, is that there's a big difference between a stock and the business. The business, and they're not related. Sometimes the stock could be high flying and the business is crap. And it could be the opposite many times. Like right now, we've seen a lot of things where you have the business doing better than ever, but now the stock is, in the tank.
The fundamentals between the company and the stock price could be completely and totally moving in opposite directions. And that's, often the case. Longer term, if the business is strong, the stock price will respond. But in the short term, you can see movements of the stock, but not the business, and you can see movements of the business and not the stock.
Okay. Well, yeah. Speaking of that, can you give some examples? I don't know if you can you share some examples of maybe cases where we see that kind of divergence, where that opportunity where the business is doing really great and the stock price is really super cheap. It's like it's in the opposite. Where do you see that right now?
Well, I mean, a company that we own in the portfolio right now is a company called Soluna Global. They're right now managed by a gentleman by the name of Les Cross. He took a company, DJ Global, where he raised about $150 million. And I think when all was said and done, he sold it for $1.6 billion. So, that's a good 10 times return on capital. And what they're in the non-surgical medical device market.
What's the symbol?
It's SGMD, Soluna Global Medical Device. They started last year, so it just went public. It was an RTO of a shell, It went public last, I believe it was June or July. And when they went public, they said, look, we want to be at the end of this year, we want to be at a $40 million revenue run rate. They've had a number of challenges, both from supply chain issues, transaction issues, but lo and behold, they got to their number. So they ended last year 40 million. Their quarter over quarter growth was about 33% in the final quarter of the year. So they're growing fantastic. And yet the stock price, when it first started trading, I think it traded about as high as $1.20, and now it's 60 cents. So they're executing, doing everything they've said they were going to. They've got a proven management team that's done this all before, and yet the stock's drifted lower. And a lot of that's probably expectations. We thought that they would probably have done maybe 4 acquisitions by the end of the year, and that's COVID. It's held some of the stuff up.
And what's the market cap? I don't know what's the market cap?
It's about 40 million. So it trades at about 1 times its sales, growing at 30% per quarter, or at least the last quarter it did.
Okay. So it's amazing. Yeah. This is okay. We have a client company that's, very similar. I don't know if it was ESC Entertainment, ESE in Canada is the symbol. I don't know if you know these guys. Very similar. They went from $1 million run rate, 50 million run rate, whatever the number is. The CEO said, we're going to do X. And finally they're there. The stock is below where it was, and this is the same situation with this SGMD.
Yeah.
And this guy has a track record. He's built a $1 billion valuation business before. So this is interesting. And again, this fits into your wheelhouse. You like the health tech space, basically.
Yeah, and they're growing organically and by acquisition. So they have a combination of the two, and we like that as well.
We got a question from the audience about Skylight. That's Skylight Health. Same. There was a health company growing through acquisitions. We worked with them in the past. Are you involved in that stock, or what's your?
So we have been. We owned Skylight. Had a great return from the stock, but again, with our process and our discipline, it traded through some technical levels and through a stop level, and we sold it out at a higher price than right now. That being said, we have our eye on it and are watching, and when we think that not only is it bottom, because we're not trying to pick bottoms, we'll actually wait for it to bottom and it'll start to move back up in most cases before we go back into it. So has it bottomed yet? We're not entirely sure it has. The business keeps moving forward. Management's been a little quiet here of late, so we'd like to hear, probably a little bit more from them. Yeah, too quiet. You're right. And we'd like to hear a little bit more from them and get some idea of both where the business is, but where it's going. And, we might buy the stock and it could be, 20% higher than where it is now. But if it goes 20% higher, we buy it 20% higher, but then it's, 50 or 100% higher than that over the next year, then we're still happy with what we've done.
Yeah, but then you have less risk once it's moving up. So you're a trend follower to some degree, right? You want to see things when you want to be with the trend.
We want the market to recognize what we see. And then on the downside, if the market recognizes something that we don't see, we want to be really cognizant of that. If you think back to the, Who Wants to Be a Millionaire show, when they would do the Ask the Audience, very rarely was Ask the Audience wrong. They were right in the high 90% of the time. The market's like the audience. It's basically just polling everyone that's out there, and it's all their collective wisdom. So, if the market's moving up or the market's moving down, we don't try to say, well, we're smarter than the market. We want to see that the market recognizes what we see on the way up. And if it starts to roll over and go the other way, what does the market know that we don't know?
Are you a fan of the moving average indicators? Or is that like a tool that you look at?
Yeah, we do certainly use some moving average indicators. We use, a number of other technical tools as well.
But like trend, but in other words, you want to be with a trend essentially. You want things where
we want to make sure the market recognizes what we see.
Yeah.
And when something's going on and we can't figure it out and the market's going the other way, we want to be listening to what the market's telling us.
Okay, interesting. No, so you really have, okay. So there's a lot of systems in play. You got a risk management systems. You have this kind of like a trend. I'm calling it a trend following system, but you have a lot of tools that you're using. It's not just the fundamentals here.
That's right. Yeah.
Okay, so you're not just going on like message formers and people saying diamond hands. That's you're not. That's when everybody's saying don't sell, don't you're not paying attention to the diamond hands crowd, basically.
No, yeah, no. One or two people don't necessarily, they have their opinion, but they don't have the collective wisdom of, ask the audience, right?
What are the stocks? You mentioned SGMD. You want to give us another name? That's like an. What do you think? Do you have a? Are you? I asked about sectors, but are you? You mentioned health, but do you think there's going to be any kind of big theme in 22, like we had in the past, like cannabis or whatever? You think anything?
Well, on that front, I mean, we do think that U.S. cannabis is set to really have, a significant year. It would need a little bit of catalyst, perhaps. But if you just look at those underlying businesses, we saw huge acceleration in their business, especially you go back over the last 12 months. We go over the last 24 months. When COVID hit, their businesses were deemed as essential, which was very interesting because they were still illegal in the US, but they were essential businesses. And we saw a huge ramp up in consumption and their numbers all ramped up. That lasted until about, probably the third quarter of 2021, when you started to see some quarter over quarter comparisons not grow to the same degree across the entire market. There was always new markets that were being introduced where you saw strong growth, and that's going to continue to be the case here. You have New Jersey, Connecticut, New York, Illinois, Michigan. A lot of those markets are all either in the process of just coming up or are a few months away from where they're coming up, and so you'll continue to see that. At the same time, as you saw this strong growth, you've seen all the stock prices drop down quite substantially, and more so than what you would have expected given the year-over-year decline or the quarter-over-quarter, sort of not decline but sideways of consumption. The stock prices are off 50% or more, so it's taken the valuation from a lot of the U.S. MSOs where let's say they were in the 12 to 15 times, in some cases even higher enterprise value to EBITDA. And now they're trading, south of 10 times. They're still growing, year over year. You'll probably see a pickup in quarter over quarter growth. And they have fantastic EBITDA margins that range anywhere from sort of, 25% to 50%. And the big catalyst is what happens from a legalization standpoint, from a banking standpoint. And from what we understand, things were really close to getting done last year at the end of the year with the SAFE Act as part of the Armed Forces bill, but it just didn't happen. And so we think that there could potentially be catalysts this year. If we saw that, it would be like you probably haven't seen an opportunity like this in our lifetimes of what that could actually mean if we saw where institutional investors could come into these stocks and they could be listed on US exchanges, like primary US exchanges, and they could get invested because the growth rate that's there and the potential is massive. The multiples that they trade at compared to, say, the S&P are minuscule. And, there's a real structural imbalance there. They've been heavily shorted. There'd be a lot of short interest that had to be covered. We just don't know when that catalyst comes, but their businesses are doing really well.
So are you saying that once this happens, because this is the thing everybody's been waiting for the last, years, the legalization, the banking, that I think they ran up on other, but are you saying that so once this happens, the cannabis stocks can have bigger runs than they had way back in the beginning?
Yeah,
really?
That's what I'm saying. If you got to the
This
point,
is the mother of bull markets.
If you're a cannabis investor, or you say you're running a cannabis company, Right now, you probably actually don't want that to happen. You want to just keep building your moat and building your business and getting more states as they become legal, and you're just growing this big monster so that when legalization happens, then your stock price will go up, and then all your options get exercised and you make gazillion dollars. If you're just an investor in the sector, though, you want that to probably happen now because the valuation and the business is so out of whack, and you'll see this flood of institutional investors come in. So, we do manage a cannabis fund. So we manage the Stonecastle Cannabis Growth Fund, and we were one of the first to launch a cannabis fund in Canada, and we've been in the cannabis sector since 2014, which seems like forever now with what's going on in the sector. And back then, probably around 2018, I and you can search it up if you go online, I'm on record saying that I think that this will be, the fastest growing industry over the next decade. And certainly it's the numbers are transpiring into that. And when we talked earlier, we said sometimes stock prices and companies are out of whack. Well, if you continue to see those companies growing like that, right now, there's structural impediments that don't allow the institutional investors to get in, whether that's custodianship, whether that's where they're trading, whether that's that they're concerned about their registration with the SEC because it's still federally illegal. Then, once those are removed, you'll see people come in en masse. You'll see consumer products companies come in. It's a massive business. Like, you think about the size of the alcohol business, and certainly from the pandemic forward, cannabis has been outgrowing alcohol, and alcohol sales have been going up. So this could be the generational opportunity that, technology was, 25 years ago.
It's interesting. Yeah, it's interesting you make that analogy because, when the internet first came out, you had all these stocks that ran up, went crazy way in advance. The market was kind of, hoping that, okay, this is going to be huge. And you had, I don't know, what it was like pets.com, whatever it was. You had these stocks go 100 and they all went back. But then all of a sudden, a couple of years later, the market actually was there. And, companies like Amazon actually did go up, I don't know, as 1,000. I mean, whatever the number, it's a huge number, whatever the number was from, if you did all the math, Amazon is up, is it a 10,000%, some crazy 100, some crazy number. So it happened. It just took a little bit longer in technology, but things are happening. Things are getting really compressed and things are happening much faster. So it could be that, I don't want to put words in your mouth, but are you saying that the next cannabis bull market is going to be essentially bigger than the tech bull market we saw, like what we saw with Amazon from 2000 to, this massive move?
Well, it's a trend that's happening globally. So if you think back to technology, in 1995, people didn't really understand what the power of the internet was, and that we wouldn't be all on, smartphones doing our daily shopping and,
Right.
exchanging messages with people and so on and so forth. They just kind of like knew it was out there. They didn't even know. So that whole market had to develop. With cannabis, you have this massive market that's already there. It's just illegal. So it just has to transition from black to like legal market. And as that happens, it goes up. Doesn't mean that it doesn't happen without issues. Like, look at the challenges in California. They have way too many black market operators that still continue to be able to operate. But eventually the government's going to weed that out because they want that tax revenue. They want those jobs that are all, like official jobs that are getting, all the deductions that governments love to take. That's just in the US.
Yeah.
Now, that's, and you look at sort of the way the trend moved. Well, there's some sort of fringe companies, countries, which I'll include Canada, is that in that, right? I mean, we've been legal now for 3 or 4 years, 4 years now, I think is the official number. And you've seen, that big market, but now you're seeing shifts like the US. You've seen multiple states go legal. You're seeing, Germany's probably at 2023. Other parts of Europe are going to be 2022, 2024. And what do you think is going to happen if all of a sudden it's federally legal in the US? Well, those US cannabis companies are going to be well capitalized and big, and then they're going to be going over to Europe, and some of them already have, to develop the markets there. And then they're going to be going to Asia or, Africa. And that it could be a massive opportunity, because humans have been using cannabis for 30,000 years, 10,000 as medicine. It's a massive market.
Okay, so bottom line is you're saying cannabis 2.0, the market, the cannabis 2.0 is going to be bigger, possibly by an order of magnitude than what we saw, a couple of years back.
If we saw legalization in the US, then it would be, you would see a massive bull market in a very short period of time. And I think that just keeps going, around the globe until, maybe 20 years from now or 25 years from now, you see mass adoption where cannabis is legal in, the majority of the world from a recreational or medical standpoint.
Okay. Bruce, are you good on time? You have a few minutes left?
I have a couple of minutes left, yeah.
Okay. What about psychedelics?
That's an interesting market. I mean, we watch it from a distance. We've, participated in some companies' financings, but the thing that we look at in that market is that, compared to cannabis, the recreational market for psychedelics is tiny, right? There's not too many people that, if you sort of survey the masses, there's not too many people that are using psychedelics as a recreational format. From a medical standpoint, that's completely different. There's some, anecdotal and a little bit of science that shows that, the psychedelic area can be huge, especially, with everything that's going on now with brain health and the importance of brain health. But that's, of course, going to take time. So it takes time to go through those trials, and it takes money. But there's going to be some huge winners there, because there'll be some psychedelic companies that produce compounds that really solve big needs in the mental health and brain health market.
Okay, so basically, it's not for the recreational side of psychedelics is not it's not a massive winner. It's okay.
I don't think it ever will be, just because of what it is.
Okay, what's your favorite cannabis stock?
In the U.S., we like Verano. It's a multi-state operator, VRNO. It's a multi-state operator. They went public last year in I think it was February, which was basically the top of the market. And because of lockups and stock that was potentially hitting the market, they never got the valuation of everyone else. So they're still trading at, they're still trading down here when everyone else is up here. And at the same time, they've been growing their market. They have, a very diversified market in a lot of limited license states. And so, we think that the management team there has done a really good job. They have access to capital. Again, you get rid of some of those structural issues that we talked about earlier, and that stock, could double to catch up to its peers. And then the peers could, do fantastic things as the market recognizes the opportunity.
Okay. Two questions. Well, I think you got 2 minutes. I think 2 minutes left, I assume.
Okay. Yeah.
Okay. Question here. Bruce, what from Calvin is asking thoughts on lithium stocks? Yeah.
I mean, we know that lithium is going to be consumed in bigger and bigger quantities. Not everyone, but, electric vehicles, batteries, all these technologies are going to, constantly be adopted and at a bigger and faster rate than we've seen in the past. And so, there's going to be a huge demand for that. And, it's an opportunity. We own a few different companies in that sector, and, we continue to like that sector longer term.
Okay. Bottom line, cannabis, you think could be potentially massive winner this year? Potentially.
I think this year could be a huge surprise for a lot of people with cannabis.
Wow. Yeah. On that note, we're going to end it. I like this. Huge surprise, cannabis. Okay, Bruce, thank you. Hopefully we'll catch up with you with some other big things. And I think the question for the future will be, when is the time to get back into CloudMD, Doc, and Skylight? We'll save that for next time, right? Oh, go ahead. You want to answer?
Well, I'll quickly touch on that. Again, we watch those, and the way we do it is different than a lot of other people do it. A lot of people are trying to buy the bottom. we're happy to not necessarily get the bottom if we know that the trend is then headed up.
Okay. On that note, Bruce, thank you. We'll see you next time.
Yeah, my pleasure. Thank you.
Thank you.